All right, Mike, here we are. We wanted to jump on here. We wanted to, we're all getting supplemental, or some of us are getting supplemental tax bills. And Mike, we should probably talk about some supplemental tax bills. There you go. You got yours.
I got it right here, right? Yeah, we get all too common this time of the year, right? We get a lot of questions around just tax bills in general, whether it's your base property tax bill, whether it's a supplemental tax bill. Why are you getting it? What do you do with it, right? Like, we wanted to hop on here to help kind of explain that. So maybe it's a little bit quicker than getting on the phone with your county or your servicer to figure it out. So first let's break into what is it?
Right. Yeah. What is it? And like you said, what is it? What do I do with it? And how do you take care of it? So yeah, that's why don't you start, Mike? What is it? What is the tax?
Yeah.
What is a supplemental tax?
So depending on your county, right, it depends on when you had purchased your property and when the taxes are due. So typically a blue copy is going to be your base property tax bill. And this is based off of the county assessment at that point in time for what's owed on the property. Not necessarily your assessment, but what the assessment the county currently has. And now it's important to keep in mind that it really depends on whether you pay your property taxes as a part of your monthly payment or you pay them separately. If you pay them separately, right, kind of easy. You're going to pay whatever bill gets mailed to you, right? You're going to be responsible for that tax assessment on the property. Whereas your base property tax bill, that gets sent to your mortgage servicer if you do have your property taxes as a part of your monthly payment. So your mortgage servicer will take care of that base property tax bill. Now that's the easy part, right? The red one, that's the supplemental tax bill. Well, what is that for?
Yeah. So just to clarify this, so if you did your financing with us, you had an option depending on what kind of loan you did, whether you wanted to impound your taxes and insurance, or you wanted to pay them separately. Now, if you like to pay them separately, those bills are due in November and February, and you would just take care of those on your own, and your mortgage payment is just your principal and interest portion. Now, even if you're impounding those taxes and insurance, you're going to still get that bill in the mail. That doesn't mean that you still owe that. So I think that's an important piece, Mike, is that you're still getting it. What do I do with it? Well, that's for your CPA or your tax preparer to be able to use those taxes to be able to help you when you're doing your income taxes. So when you get this red one, though, now that's a little bit different. Now we want to make sure that, do you need to pay this? And sometimes if we set your loan up and it's a new loan for you, then we already kind of incorporated that supplemental tax bill in there. So you just need to reach out to the servicer and we can help you with that. And it's all about making sure that you're not going to have a shortage in your impound account, because we don't want to pull from that. And then later on down the road, now all of a sudden you have a shortage and now you're getting another bill in the mail. And now why is my payment going up? And then that's a whole nother conversation. So make sure that we're helping you through this process.
Yeah, and I will say this is probably my biggest pet peeve of the mortgage industry. I know I talked to a lot of you about this, and so it's a very common question. And it really boils down to the difference between when you close on your house at that new purchase price and when the county actually reassesses your property. All right, let's say you bought your house for $500,000, right? We, as a lender, collect the property taxes based off of that $500,000 from your first payment. Well, let's say the current owner's assessment was only $250,000. So the county is still continuing to bill based off of that $250,000 assessment. That's your base property tax bill, and they haven't increased to that new assessment.
Now, so let's stop for just 1 second. So that current owner, the seller, that assessed value of that 250, it's going to be much lower in this instance that Mike is spelling out, because they've owned the home for a long time. They bought this home way back when, and therefore the home was they bought it for a lot less. So go ahead, Mike.
Yeah, so that's really the big difference. Now you get this supplemental tax bill, which is when the county finally reassesses your property to the purchase price. They are now billing you for that difference in value, that $250,000, for your responsibility from the time you took ownership to that time that fiscal year is ending. So you'll see that on the supplemental bill where it's billing you for, what prorations it's giving you an assessment for. And so what happens is, well, this supplemental only gets sent to you. It does not get sent to the mortgage servicer. So us as a lender, we don't get notified of this. Now, the tricky part is when you get this bill, right? And because sometimes what happens is, this is confusing, so I'm trying to boil it down for you.
Simplify.
Yeah, if the mortgage servicer has done an assessment throughout the year and they've sent you a refund because they say, hey, you have too much money in this impound account based off of the old owner's assessment. You're happy, you got a refund, your payment went down. Then all of a sudden the county comes around and they say, wait, your assessment is this, here's your supplemental tax bill. Well, there's not enough money in your impound account to cover it because it was already sent back to you. And it creates this lag of now you have a shortage down the road. So the key is to get that supplemental bill as quick as you can and to tackle it as quick as you can. Don't just think that it's going to take care of itself. It won't. It'll feel a lot worse when they increase your payment down the road. So getting that supplemental tax bill over to us, your mortgage servicer, to figure out, can you pay it? And keep that red flag when you get a check in the mail from your mortgage servicer. Do not spend it. That is not free money. It is allocated somewhere, just not somewhere yet.
So I think what I'm hearing you say, Mike, is that when you get that tax bill, whether it be blue, whether it be red, it doesn't matter what color it is, reach out to us, because this is what we do for our clients. And this is where our industry really falls short. Like, you close the loan and you never hear from the lender again. We want to be here for you. So make sure that you're reaching out. We want to help you. And then we can help you decide, hey, what to do with this tax bill, what to do with this check that you got refunded because the lender said that you have too much money in your impound account. So we want to help you through that, and make sure you're reaching out before you do anything.
Yeah, and I would say to reach out at the first sign of change, whether that change is a good change because you got a refund or a decreased payment, or it's a bad change where your payment went up or you got this bill, right? As soon as possible, because we can then set you up correctly to limit the amount of issues down the road. So that's really the key here.
All right, Mike, that was a lot. So that is a lot of information in a short period of time. So if there's any questions, reach out to us. We want to be that person to help you. So thanks for listening. Thanks for joining us. And we'll see you on the next one.